Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I are going to turn back to the markets and talk a little bit about some of the things we're seeing there. You know, the way to describe the current capital market behavior really can be summed up by saying it seems to be melting up. And what I mean by that is not a lot of volatility spiking up and down and causing people to go back in the bomb bunker and then look for some sunshine. It's really just a slow grind up. And it's interesting because Kris and I watch a lot of the data points, and in the face of a recent IMF downgrade to global growth forecasts, Kris, some of the things that you and I are watching are all starting to move the needle a little bit in the right direction.
Yeah, absolutely. And if we look at the U.S. market in particular, which is still the largest economy in the world, we can look at their housing sector, which was absolutely decimated for the last several years. Almost all data points are pointing to positive developments there, and recently in U.S. bank earnings, we're seeing all of those bad assets getting diminished and paring down in terms of their percentage weighting, and delinquencies have improved substantially. Jobless claims have also been another factor that's been seen a good improvement.
Yeah, you know, the interesting thing is we said housing needs to be part of an uptick in the markets, and so does the employment numbers. And the jobless claims that came in last week were the lowest number that we've seen since 2008. So as we said, we needed to see improved employment numbers, and we got that quite recently.
Absolutely, and if we look at the consumer, which still represents 70% of U.S. GDP, we've seen the highest consumer confidence number that we've seen since 2007. So obviously, broadly speaking, consumers in the U.S. are feeling better about what's going on there.
And you know what pairs up well with that, Kris, is retail sales. And so the recent retail sales numbers also moved the needle a little bit more positively. And the interesting thing there is the August number, which really wasn't great, was actually revised higher once they reviewed the data and subsequent data points after that. So again, going in the right direction, not by leaps and bounds, but moving, you know, up slowly.
Absolutely. If we look at the second largest economy in the world, that being China, we've also seen some very significantly improved trade data there, which looks like we might be starting to see things kind of leveling out in China.
Yeah, and that would certainly be a positive. So one of the things, Kris, that we've talked about is we watched fund flows, and it's interesting that we're just now starting to see a number of these things line up ever so slightly on the right side of the ledger, and yet fund flows continue to be pouring into the bond side of the market and leaving the equity behind. If you said, what's the smart money doing? Well, really, I think some of the smart money's been quietly, you know, over the last few months going into the equity side where the deals are.
Yes, absolutely. And as more and more of this uncertainty surrounding the U.S. election, fiscal cliff, change in government in China, and further resolution to the European problems takes hold, we expect to see things continue to improve. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. We're going to continue talking about some of the market dynamics. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.